Hello and welcome to J. Mike Mortgage. This is J. Mike Perkins. In addition to being a mortgage loan originator, I spent about 13 years as a professional mortgage credit counselor, working for several major national home builders. And oftentimes, credit is a barrier to home ownership. If you're trying to build your credit or you're trying to rebuild your credit, most credit counselors, myself included, would advise you to have at least one active open credit card in your name. Recently, I've noticed several companies that have been offering a type of prepaid debit card, claiming that it was a secured credit card, when in my opinion, it's not. So I put together this video. Don't get a fake credit card. A prepaid debit card is not revolving credit, so it's not a real credit card. Credit comes in different types, like an apple and an orange, a Ford and a Chevy. The most popular type of credit is called installment. With installments, you borrow all the money up front, then you make regular monthly payments. If you send in extra money on your installment loan, they don't lower the payment, you just pay the account off early. There are numerous examples of installment loans, like auto loans, mortgages, student loans, finance company loans, and numerous others. The other main type of credit is called revolving. Revolving is typically going to be a credit card, but it could be a bank line of credit. On revolving, the payment will go up and down as the balance goes up and down. The account is reported as revolving on your credit report. It's coded that way. And also on a revolving account, the creditor will report what is called credit utilization, which is how much of your credit line you've used. That information is essential to calculate your credit score on revolving credit. Let's go over how a real, genuine credit card that will report as revolving credit, how that works. If you apply for an actual, real credit card, they are going to check your credit. They'll just do an inquiry on one bureau typically, but they're going to do an inquiry. If your credit is good, then they'll just give you a credit card without making you put up a deposit. That's called an unsecured credit card. If there's some kind of a credit issue, they may ask you to put up a deposit. They'll hold that deposit as collateral and give you what's called a secured credit card. One thing that is very important with a real secured credit card, when you charge up something, they don't make your payment out of your security deposit. Your security deposit is held separately as collateral, and they don't touch that unless you default on the loan. A real credit card is always going to have two characteristics. It's always going to show up on your credit report as revolving credit, and they're always going to report what is called credit utilization, because that's part of the scoring. If you want to try to keep your scores as high as possible, I recommend that you try to keep the balance on a credit card somewhere around 30% or less. This is how a prepaid debit card works. First of all, when you apply for it, there's no credit check. In fact, they'll usually advertise the no credit check as a feature of the product. You put your deposit up in a special bank account. Then they give you the card and you can spend up to the amount that you already have on deposit. The balance is paid in full, of course, every time that you make a purchase on the card. If anything at all is reported to the credit bureau on a product like this, it shows up as what's called an open loan, which is a type of short-term installment loan where the balance is paid in full every month. That won't hurt your credit, but it's not going to help you like having revolving credit would be with a real credit card. Also, no credit utilization information is reported to the credit bureau. Credit utilization information is an essential part of any real credit card that reports as revolving credit. There are some companies out there that advertise a prepaid debit card as a, quote, secured credit card. Now, I personally find that to be very misleading. I assume they get away with it because some kind of information is being reported to the credit bureau every month. However, what is being reported is not the same thing as what would be if you had a real credit card that reported as revolving credit. Also, what they're trying to do basically with one of these is say that every time you make a purchase, it's a short-term loan between you and the company, which is then immediately repaid by the amount of money that you already have on deposit in the bank. So, if they do report anything, what does show up on your credit report doesn't help you that much, at least compared to a real credit card that reports as revolving credit. 2 red flags to look out for is this: no credit check. Okay? Every real credit card that reports as revolving credit, even if it's a secured credit card, will check your credit. If they don't check your credit here, it's because they're not technically extending credit to you. Also, the second thing to look out for is when the balance is paid every month from the deposit amount. If it's a real secured credit card, say, and they ask for $300 in deposit, they would hold that amount separately, and you would not make your normal monthly payment out of your deposit amount. They would only take the deposit if you defaulted on the card. So why do you need a real credit card that reports as revolving credit? The way the credit scoring formulas are written, they want you to have a mix of both installment credit and revolving credit. And if you lack revolving credit, you're going to lose some points in your credit score. Now, somewhere on your credit report, you're going to see a list of factors, and these are things that are reducing your credit score. Now, exactly where it appears on your report depends on how it's formatted. But if you see this message pop up in the factors, lack of recent revolving account information, that means that you need to open up a real credit card that reports as revolving credit. Now, it's certainly possible for someone to have an acceptable credit score and not have any credit cards. If you have enough installment debt and you've paid it on time for a very long period of time, you can overcome the fact that you're losing some points for not having a credit card, but that takes time. The vast majority of the benefit in opening a credit card is from the very first one. You may get a few extra points for opening a second credit card, but most of the benefit is going to come from that first card. Now, I am no fan of credit cards. They've certainly caused me problems in my own life. But if this message applies to you, lack of recent revolving account information, and you need a big boost in your credit score and you need it quickly, you're pretty much going to need to open a credit card. Now, let me give you an example, a typical example from me as a credit counselor, okay? Let's say that someone comes in and the goal is to raise their credit score 75 points as quickly as possible. I pull the credit report, I see this message, lack of recent revolving account information is one of the factors. What I'll do is use the credit score simulation software to come up with the best plan for them to get that 75-point increase. And I'll usually try to work out 2 plans. One where they open up a credit card. They may have to do something else too, but they have to open up at least 1 credit card. And the second plan, they do whatever they have to do in plan 1, but they don't open up a credit card. They depend on installment debt to increase their credit score. Typically, what I'll find is something like this. They might be able to get that 75 points in 6 months if they open up a credit card. But if they don't open up a real credit card that reports as revolving credit, it might take them an extra year to get that 75 points. Don't fear getting an inquiry on your credit report opening up a credit card. Okay? First of all, it's not true that every inquiry lowers everyone's credit score all the time. It's more complicated than that. It depends on the timing of the inquiries and also what kind of inquiry it was. But worst case scenario, that inquiry might reduce your credit score between 3 and 5 points. But the credit card company, odds are, will only check one of the 3 bureaus. When you get the credit card, try to keep the balance somewhere around 30% of the credit limit if possible. That way your credit utilization will look good and they'll boost your credit score. If you're concerned about making the payment, set up an automated payment that at least makes the minimum due every month so you're never late. You always have the option of making an additional payment if you want to pay the balance down more. Let's go over the big points in this video. The first one was, Just because something is advertised as a secured credit card, that doesn't make it a real credit card. It could be a prepaid debit card. If it doesn't report as revolving credit, then it's not going to boost your credit score like a real credit card can. The two things to look for when you're applying to try to separate out prepaid debit card from a real credit card is, first, do they do a credit check? If they check your credit, it's probably a real credit card. If they don't check your credit, it is probably a prepaid debit card. And then finally, how do they make the payment? With a real credit card, they do not make the payment out of the deposit. That's held separately as collateral. However, on a prepaid debit card, every time that you make a payment, it comes out of the deposit amount. Thank you very much for watching this video. If you found this information useful, please hit like and subscribe, and feel free to share this video on the social media site of your choice. On behalf of J. Mike Mortgage, this is J. Mike Perkins.